Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, March 27th, 2020. We'll stick to just the markets here. We're not going to do an all-inclusive video. Maybe I'll get something out over the weekend, certainly by Monday morning. But let's focus on the markets. That's what today was, at least for me, is just focus on trading the equity markets. Let's just start out, kind of recap what we have, because we now have an official trade on QQQ once again. So really starts out with, I mean, we've been, navigating this bear market, what you want to call it, bull market up until yesterday. That's what Wall Street Journal wanted to call it, because we rallied 20%. But to me, it's just a bear market, and we're navigating that right now, long and short. So it starts out last night, a quick update. You probably have seen all these by now. I hit the maximum target that I've had for weeks now with these divergence. All that was on QQQ was T3, and that was a final target. We hit it to the penny last night, so that was a great area to go, a very objective area to short, and which I mentioned going home short. And remember these, when you see line breaks, I don't draw all the squiggles out, but that's where I expect a reaction. So that was 185.46. That was then last night. Followed up this morning. That's where we were just above, and then went on to hit it. So remember that was in pre-market right there. Let's take a look at the charts today and go to that right now. Okay, so this is the same chart. This is a live chart here. And so there's that T3 level right there, hit to the button, reversed, and there's the 185.46 target, almost a perfect hit. And it was interesting. This was the tightest range we had. We traded on that all morning. This is the 60-minute. Here's today's price action right here. We gapped down, hit it, traded most of the day on that, at least the first half of the day, and started a rally, came up here, and hit the bounce target. I told you early on I was going to be flexible on this, but I listed that as a likely bounce target for today, 189.64. And then I fired off that post, which I'll get into now. That is unusual. You probably have, if you were listening to this video, you probably already got those two other posts. I usually try to get trade ideas out in advance, but in a fast-moving market, I told you this, talked about this before. I think it's in the comments sections, which I encourage you to go back in and read. I'll post updates on trades and answer questions in there. Can't get to them all, guys. I'm trying, but it's just been last few weeks crazy. A lot of money to be made in the market. So my primary focus is first and foremost on analyzing the charts. Trying to read things and get out my thoughts as fast as possible, any levels or developments. So that's what I did today in firing that post off. Let's just look at one other thing here. In the post this morning, reversing those shorts back to long positions. In a few comments below, I said, one of those being early on, by the way, the scenario arrows indicating the bounce are not drawn to any particular bounce target level. I'm referring to the ones I gave you this morning, showing a bounce here off that level. And so I went on to say, let's go back to that. They're not to any target. As of now, my plan is to allow for a little more downside on the longs. Remember, that was this morning. We were just above. We hadn't yet hit those levels that I just showed you. We did go on to hit. So that was, almost a perfect entry there. I wanted to go in early just in case we reverse shy, and that even gave me room to add this morning. We got down there and we held that support like a champ all day long. So if needed. So there were still quite a bit of resistance and support. I'm going to get to all those in this video. I covered it earlier today. We'll look at the futures. Again, we're only going to stick to the markets here. We're not going to go oil and gold and all that right now. So I said playing it one tick at a time, waiting to see how the markets trade once all the players step on at 9:30 a.m. That's the opening bell, meaning the institutions come in, and so you're going to see really where the market wants to go. Pre-market trades and the futures around Globex session that's off hours, they can be a little bit whippy, but again, they work well to the technicals. And I mentioned that a lot of times you'll see support and resistance levels and price targets get hit in pre-market or after hour session on QQQ or SPY or anything else, individual stocks, and sometimes that's your only or your best opportunity to enter or exit those trades. So I encourage everyone, if you are, if you like this active trading thing, if it's not for you, step back. I try to always hit on the bigger picture where I think we're going, but again, there's just tremendous amount of money to be made in this market, gaming these 3, 4, 5, 6, 10% intraday, or swings in a day, hour, few days, and so that's what I do. I'm in active trading mode right now, and like I said earlier, it's basically the same thing we do swing trading normally in a slow grinding market, but we might make 10% or 5% in just a few hours now, where normally it might take you weeks or even months to make 5 or 10% on a trade. All right, so anyways, went on to say, okay, there's it. Potential bounce targets for QQQ 189.55 and 258.75 on SPY. So back to the charts. That's 189. I had two different boards here. That's why I said 189. Well, close enough. I've used a lot of different charts. And so this is the one I'm using now for the new active trade. And that's why if you wonder, hey, where do those other levels go? Why are some of the lines different? They're close, but here's the board for the official trade. And on that, let me just go back here. I posted an update today saying we already hit that first target. As I mentioned in that post that I got out when I put the trade setup, if you go into that post, you'll see that I did follow up with commentary right after. And again, if there's any confusion, the reason I did this is it's a fast moving market. I wanted to make sure, I was reading it right and figured, okay, look, there was no guarantee we were going to reverse, but when I decided to pull the trigger on it, we were right there. We hit that bounce target. As I said this morning, that was all I was looking for. Again, that was in the comment section when somebody asked me this morning, Randy, so if you think we're only going to have a little bounce then go down, why even bother with it? And I answered that. Like I said, it was a 3% bounce in the markets, and so that's 3% I saved giving back profits on staying short, plus another 3% I made profiting by going long. So that to me, if you put 6% in my pocket right there, and I close that out, so that's booked. That's a booked 6% gain following the drop last night and covering there, not even including the previous gains. So that's why I do this, and I know it can be very difficult to try to navigate this market. So I do these videos and I get these things out so you have the levels in advance, and I'll do my best to send out posts and updates if anything changes. But as of now, that's what we're looking at. So as I said, that's probably that was the entry right there. On my final post here, I did an update on there. I gave you the exact or adjusted targets. They're very close, especially the first ones. When I get down towards these final targets, I usually give it a little more padding there. And like always, if I need to modify this trading plan, meaning change the stop, at this point I would probably only consider lowering the stop. But as far as the price targets go, I may extend targets depending on what happens over the next few days. Well, next week. We're going into the weekend. And I may also pull in targets. Maybe revise this to be the final target or this. It all depends. So we're really not going to have any idea. I will study the charts over the weekend, but of course, futures now, they're going to close down soon and they won't open back up until Sunday night. Okay, so that's pretty much it. Like I said, they hit that first target. When we hit it, I try to get that post out as quick as possible. And I said I expect they'd park it there. They parked it just under that level. You can see we fell sharply. Look at that nice little bear flag action in the middle there. You can see that little zigzag here. Fell down. That blue line is the open. Look at what the algos are doing. This is the computerized trading. That I don't know if you can make it out. Right here is a blue dashed line, dotted line there, and that we hit, and there was a little bounce right there. Buyers stepped in, or there must have been some buy orders there. Gave a little perfect bear flag pattern, and then it broke down and right before the close. And as I said, this is what I mean by them parking it at the close when it hit that support. I mean, there was a little momentum fueled overshoot. That's actually not only normal, it's to be expected when you're waterfall selling like this. You're going to overshoot, and so you can see for the rest of the day they parked it there. This is the market close right here, 4 p.m. This is, you're looking at after hour trades right there. So that's it. Let's look at the rest of the stuff and things to watch for next week. This could certainly go either way, but as of now, I like this trade. I think there's a possibility this is could be the end of a run of a bear market rally, and it may just be the start of a correction. At the very least, right now, I'm just looking for a correction. I think I shared my thoughts earlier. Trading, I mean, anything can happen over the weekend. Got to be open for that right now with the developments of coronavirus. We could crater. We could go up. I don't think we'd rocket up. It's always a possibility, but I think the most likely scenario, we're going to have to chop around, and hopefully we can continue to thread the needle next week like we did today, between all these, little micro levels, we'll call them support and resistance levels. All right, so that's how we close the day. There's your bearish rising wedge I pointed out earlier. That was the whole, basis for this trade. Bearish rising wedge pattern that broke down, hit support, the first target. We gamed the bounce off that support by covering there this morning, and then boom, shorted down. And I think there's more downside to come based on the scope of that pattern, at least to that T2 very minimum. Next week would be my, again, minimum target right now. I had no desire to cover other than just we're heading into the weekend. So I took some profits, right at the close today and a little right after, because I didn't want to, you have 2 days of overnight risk. Even if you're a futures trader, they're going to shut down over the weekend, open on Sunday night. So that's that. Let's look at the other ones, which are SPY. We had SPY right here. SPY target 2690. I should say 260.90. Right there. That's that former T2 level. So we had resistance here at 256. We popped that and then went on up to hit there. Now, like I said, a little more downside. You can see SPY. Actually, you could put a line here. SPY for the most of the day, where you can see my crosshairs right here. That's where SPY held, and that's where they parked SPY. That you could add. I could have added a support line there, but again, my focus now, at least on this trade, I went back to QQQ instead of SPY. Let's see. All right, let's look at the futures. No, I take that back. Let's look at the bigger picture. For those of you that your head is spinning with all this in and out, short-term trading stuff. Bigger picture also for a short. Both yesterday, going home short last night, and then reshorting today when we tested that high again. Is this? This is much more significant. This is your swing trader, your 401k investor, IRA, longer term. This was a very important support level here, about 262 right there on SPY. It defined, other than these quick momentum fueled overshoots, there were a lot of reactions around that level. We snapped back up there after intraday breaks and held back there. We had a major reaction low back here in late 2019. Another test of that level, another test. Boom. When it broke, we didn't just limp on down and meander on down. We had a waterfall sell-off. That tells me that was very significant support. You can see how well defined. And the more you tap on a level over a longer period of time, the more significant it comes. So when it breaks, that's what happens. So again, that was in recent enough history on this chart, this daily chart, to tell me that was a big level. And we regained it there. We tested it for a couple of weeks, and then boom, off to the races. So here we were already kind of waterfalling down to it, but we had at least one reaction there. We overshot it, regained it the next day, couldn't hold it, boom. So either way, it's a level that's important. And if we pop up here, if you want to know where the next resistance, in case I'm wrong on this short trade, I'll consider just a 2.2% gain wrong if we go on and get stopped out from here, because our loss will probably be bigger than that. But 273-ish right there, 273.28, very good level. So if you are bullish right now for next week, and you're looking for a target, that's one right there. If you are bearish but you're wanting to get a little more upside before you short, that's also a level for you right there. And you can see beyond that, you can see that next one up there is at 282. So I think we do this. We may work our way up there. Again, I'll just monitor the fundamentals, watch what's going on with coronavirus, watch which states are we seeing more and more not quarantines, what do you call it, restrictions, trying to keep people in their homes? Are they going to loosen up? In other words, it's really, how bad is, what are we going to see, what kind of developments over the weekend? And that'll factor into, I think, whether we see any of these targets anytime soon, or we make another leg back down. All right, that's SPY, and let's look at QQQ. QQQ, I have a lot of different boards up, but let's just look at this one. It's a little messy, but I'm going to just highlight the important levels here. Right here, that's a big level. I talked about it back then. 194, right around 194. It was major resistance here. The market was trying to break above it, failed, tried again, failed, tried again, failed, but then finally broke out right here. And when we hit it on the way down, we had a nice bounce off there. We went from this level, we undershot it briefly, spiked, and I think that was about what was that, off that low right there, that was a good about a 6% pop the next day. Came back down again, so we had 3 days in a row we tested that level, then finally broke it with a big bang, and that helps to validate that as very significant. The fact once we broke it from where we closed that previous day, we dropped and closed about almost 9%. That was one of the biggest down days in decades right there. And then look, back tested it. So what I'm doing here is just showing you the more reactions you have on a level, 1, 2, 3, 4, and then a bunch back here, the more significant it is. And here's another takeaway. You guys always hear me say, if I'm targeting 194 for the bounce, I'm not going to hold out for that last few cents and get greedy, being long and then waiting to short, because if all eyes are on 194.02, guess what happens? Yeah, the sellers will step in early often. Or sometimes what they'll do is they'll blow by it to blow the stops and kind of fake you out. But I can't bet on that one. If I'm holding out for that scenario, I'm still going to miss my entry. I might, do a little better, squeeze out a little more on staying long. But if it doesn't happen, then I don't get to exit my longs, and I don't get a short at a good price if I was holding out for 194 or better. And then what happens? The market's tricky. It likes to do this to you. So everybody yesterday that was cheering and happy because we're in a according again to the journal and everyone else, a new bull market because we went up over 20% in the S&P or whatever they were using. They went home long. They chased the rally, or they didn't want to short because the market was so strong. Well, guess what it did today? It gapped down. 3 better than whatever it was, about 3%. And what that did, it denied an objective exit for longs that are, in my opinion, we're getting too greedy on that rally. Should have, started at least taking some profits there. And it also denied what I call wannabe shorts. Those that like to short, but they're waiting for some like magic green light, maybe a tag of 194. And so now maybe they're not in, and I would prefer that being short right now. Because if a lot of people piled in short, if we had just went there and let's say we opened there again today and the market slowly rolled over, from where we closed yesterday, that would give longs plenty of time to have a stop loss in place, tight stop, have that stop hit or sell out. It would also give shorts plenty of opportunity to get in once they saw the market rolling over. So I just want to say I kind of like what happened today. Maybe they recycled back in on the pop. I don't know. Either way, as of now, it looks good. I just wanted to point out these levels here. And then if 194 is taken out, let me just show you some of the bullish scenarios here. If 194 is taken out, 200 is really good, a pretty decent resistance. And this key trend line right here, you have a trend line as well, not too far above. So forget about these targets. That was our last long trade, official long trade back here when we caught the first counter trend rally. And then we went short after that, caught most of the move down there, and closed out the last official short right there. Very interesting to note, although SPY I have on a longer term sell signal, QQQ is still at both above or just right at close enough. And remember, today is the 27th of March, so we're going to have, let's see, Monday will be the 30th and Tuesday the 31st. So 2 more trading days in the month, and I'd love to see where this candle closes. These are, I have various trend indicators, but 2 of the most important long-term trend indicators I have are this bull market trend line, QQQ, unlike every other sector or every other index, major index, they all bottomed in March of '09. QQQ bottomed a little bit before that back in November of 2008, but you have still that major reaction low in March of '09. It is a beautiful, well-defined bull market uptrend line, and believe it or not, QQQ is still close enough in proximity to say that it hasn't taken it out yet. It is below it, and then there's also that, again, I think is a beautiful trend indicator, that 20-month exponential moving average. I've talked about it so much. Just does a great job of defining bull and bear markets, acting as support during a bull market, telling you when you take it out with conviction, solid red monthly close below, you're in a bear market, stay short, don't get back in until it tells you, this 401k stuff right here. Bull market doesn't look like much, but that was a big bull market from 2002 to up to 2007. And then that was the Great Recession right there. That was a 55% drop. It doesn't look like much because, again, this is what I call a supersized bull market, a la the Fed and every other central bank in the world just printing money and taking rates to zero. They've created another bubble like they did back in the dot-com days and the housing crisis and all that. So that's why we're seeing. That's why I laugh when they try to say, "Oh, we're a bear market. Oh, yesterday we're in a bull market." It's all this is just a correction right now in a bull market. When you take a step back here and go back 11 years and see what we've come, it looks no different right now than what we saw back in on the chart here, at least what we saw back in late 2018 or that flash crash back in 2015. And we're still holding that 20-month right now. Look at that's almost exactly where QQQ closed today, right on that 20-month. And again, sometimes you can pierce it intra-month and then close back above it. So that's why I'll be interested to see where we close on Tuesday of next week, how we print this candle. And if it's close enough, you give it the benefit of the doubt. But it's not going to change anything for me. Right now, it's pretty clear that, especially with the S&P 500 breaking down, we probably most likely entered a new bear market. Forget about the numbers, again, how far we've dropped. I'm talking about more downside to come over the next year or so. And last but not least, let's look at the stock futures for you, those of you that do trade those. And even if you don't, as I always say, keep an eye on them because sometimes you'll be trading QQQ and NQ or even ES or SPY will hit resistance where NQ or QQQ is just a little shy of its comparable resistance, and then the sellers may step in there. Big sell orders come in on ES or SPY or NQ, and then they reverse. So that's why I like to keep an eye on all of them. All right. So earlier today in the update I've made, I said so far successful test and reversal. So this is what we're watching for next week and going forward right here. This trend line, again, this was the chart posted earlier today. We have an uptrend line here, and you had a minor downtrend line. So this was a setup earlier today. You had both a lot going on here. You had us fall back and hold that 76.20 support level. You see each of the candlestick bodies close there on these 60-minute chart. Then you had a breakout right there. That's bullish. See the green candle right here. Here, I'll zoom in even a little tighter. There it is. Breakout of this with that candle, and you also took out that nice clean downtrend line. So 3 things happened right here in close proximity. You successfully held 76.20 support. Then you broke out above the NQs, broke out above the downtrend line, and bounced off the trend line as well, the uptrend line. And then, as I said right here, you had it was just taken out barely above the 77. I said called it 77.10ish. Excuse me, guys. Long day, long week. 77.10ish resistance level, and so if NQ can take that out, then a continued move up towards 78.85 is likely. The chart was so small I couldn't even fit my arrows. I tried to put them in there earlier, but now that I'm zoomed in I can show you. So that's it. There's 77.85. You can see that was my uppermost resistance level or target on this chart, and that was it. So that was, we were able to get a move up to there and reverse. That's where I reversed long to short. And let's look at the updated chart, see what happened since then. We'll have to zoom it in here, which I'll do now. This is a live chart, and that's it. So as you zoom in here, you can see on the candles what happened from there. There's that 77.10ish level. We took it out and ran up, and all in this one candle. So that's why you have to be quick. That's why I fired off that post. You hit it right there. There's 77.85 or 86, whatever, plus a couple pennies to spare with a momentum fueled overshoot, followed by a powerful reversal. And that's why, again, I wanted to get that post out without taking the time to get all the official targets and the other notes. I gave you the important parameters, the rough targets and the stop and the suggested position size, and then whoop, that's one heck of a reversal right there. Look at that stick, about a 3% drop on one 60-minute candle from high to low. And there's where we are in the after hours session. So that was that, and let's look at ES. Okay, in the same post that went out earlier, titled Stock Index ETF Futures Updates. Right here, so far we had a successful test. Similar, almost an identical uptrend line on ES. These are the S&P 500 futures. So they fell to trend line support. Kissed a perfect kiss almost of that 2500-ish or 2504, whatever you want to call it, support, followed by a breakout above the downtrend line right there, that minor downtrend line right here, and successful bounce off the uptrend line. And then, as I said, we had so we had already started to crack. We already took out an ES at this point in time when I took the screenshot. It had already broken out above this 2550 resistance level right here. And we had one candle, we were above it there. So I said all we need now is NQ to follow up and take out that 77.10 resistance level that it was testing at the time, because we'd already taken out 2550, and that would give us a move up here to 2589. And that was then, and this is now. Yes. Zoom in nice and tight. There it was, 2589. A little bit of an overshoot, but then if you gave it a little room, which you need to in trading this market. You can't. I told you can't use super tight stops in this kind of volatility. They're just going to take you out in the back and forth noise. So that was good for about a 3.25% drop, or over at least a 3% drop from where it topped there. And here's where we parked it for the day, to end the day right there. Or well, about to end the day. Futures are still going right now. There's that 2500 support just below. So bigger picture again. I kind of gave you the bigger picture on the daily charts and monthly charts. But what we need to look for now next week is let me clean this back up. Get back to where I want to zoom in. Are these trend lines I just showed you on NQ and ES? If they break, that's going to be pretty bearish because they were tested. I mean, did break right before the close today. This is after the close, but for all intents and purposes, we pretty much closed on it. So if we gap down next week, you'll see, you can watch the futures on Sunday night. The level to watch now, 2500. If they take out 2500, they've taken out the trend line and they've taken out support, and that should open the door for our next targets. That target on QQQ. Same levels that I've been posting on the upside were resistance levels, and you can see them now as potential support levels or targets on ES if you're an ES trader and you're targeting. I'd say maybe somewhere down to here next week if we can get some more follow through to the downside, like I suspect we do, and that would be good for a drop of maybe about another 7.5% or so from where we are right now in the after hours session, or about almost 8% from where SPY closed today. All right, and that's it. The only other one I posted in the trading room earlier today, set up here. We had the same comparable trend line on RTY, the small cap futures, and it's right here. And you also had the 111.16 level, so I said that was an objective long for IWM or RTY or M2K, which are the mini Russell futures. And the same thing happened. You had a clean little downtrend line to watch. RTY, Russell futures held, took out the, bounced off both the trend line right here and the 111.16 price support, took out the uptrend line, and then went on to hit the target. I had a target of 11.5527 right there at that candle. It took it out by, it was almost a perfect tag, you can see. Then we powered up, we had a little overshoot afterwards, but and then boom, right back down to the 116 support, you can see here. And the trend line, we're just a hair below it. So that's it. They're kind of all in sync right now, all the futures here, small cap and large cap futures. So you have, the story is where we close today. So if we gap down next week, we're going to have taken out trend line support, price support, and some other things. If we gap up, it means that these were successfully held, because we're going to park the week here as soon as the futures stop trading a little bit. And so we'll have to pick things up. You can watch Sunday night. I usually don't post over the weekend unless anything really big is going on. I won't post an update Sunday night unless, again, there's a big move. And at that point, I will if I have any thoughts, especially if it goes against our position, or even if it goes for our position, because what you want to watch for is maybe a gap down to one of our targets. That's something else you want to do. So, if you see a big drop in the futures on Sunday night and into Monday morning, then take a look at QQQ and pre-market. And if we're heading down, if QQQ is trading, let's just say at 179.27, that's right around there. The actual resistance support levels at 178.84. You may want to cover, because the market will probably open and bounce, at least on the initial tag. That's why I put those arrow breaks there. Doesn't mean it can't go down through it, but if we were trading there at 8:30 in the morning on Monday, and it's been holding, there's a good chance you can get a pop at the open. So you might want to cover and recycle back in, or we'll see. We'll just take it by ear or play it minute by minute when we see what happens next week. All right, guys, it's been a long week. I could use a break, so I'm going to shut this down, and hope you all had a good trading day today, and hope next week's even better. Have a great weekend. This has been Randy Finney with Right Side of the Chart.